What's going on, guys? In this video, I want to give you a couple strategy examples on how you can play the 20 play using the 20 period moving average as your gauge, as your indicator to kind of take trade short or long. Now, again, this is going to be for the NASDAQ 100. You can definitely use it on other asset classes or instruments. And what you're going to really do is think scalp, right? We're not going to sit in here and we're not going to try to get 40, 50, 60 points. Okay, that would be great, but that would be more so for a trend trader. I'm not so much of a trend trader. I'm a momentum and a scalp trader. So what we're looking at here is the New York Open, and we are looking at today's price action. Now, again, today's price action is very thin. It's the day after the holidays. Again, there's not a lot of market participants. I myself am really not looking to trade until after the new year, until things kind of settle down and we get everyone back to the market. But there was some pretty good little plays here, and I want to highlight those and show you guys how you could trade them. Now, again, I definitely recommend having multiple evaluation accounts going at once, multiple funded accounts going at once. That way you can diversify your risk. You can switch in between accounts on different trade setups. So that way you're spreading out the risk. And yeah, maybe you take a couple of losses on a few accounts, but all in all, you should be profitable if you're spreading out your risk, taking different trades on different accounts. Okay, definitely recommend that. So what we're looking at here is right off the New York Open, we get a 20 play that confirms. Now, right before the market open at 9:25, you're going to see here, and I'm going to highlight this box, you're going to see that it was a 13-point range candle right before the market opened. And if I was to drag this box across using this as our stop loss, meaning that if we get into this trade and we lose the bottom portion of that reason why candle, we're going to lose 13 points. So if you're trading one mini contract, you're going to be down around $230, $240, give or take. So just kind of factor in the risk on that. But we're looking for something close to a 1-to-1. Now, I recommend a lot of my guys take 5 points, but again, if we're going to risk over 10, 15, 20 points, we want to try to get close to that 1-to-1 as possible. I'll show you how on bigger candles you can definitely tone down that risk that you're putting on the table. But if you look at this particular situation, again, opening drive play also correlating with a 20 play would have hit for 13 points here on this opening candle. So again, that's around a $200 winning trade here. Now the next trade setup that happens is just a few moments later at 9:45 in the morning. This was also a 15-minute orb that did confirm. It was a great play to the short side here. So those of you guys inside of Evolution Traders know we trade these orbs. This was a fantastic play here. If you look at the range of this reason why candle, it was 41 points. So what I like to do in this type of situation, when it's over 35, over 40, 50 points sometimes on the NASDAQ, I like to really either take the ATR, which at this point is sitting at 22 points, or I like to take the reason why candle and cut it in half. So if I was to cut it in half, we would be looking at around a 20 to 25 point stop loss, which means that we're going to lose anywhere between $400 and $500 on one mini contract. If you want to tighten up that risk, we're going to go play 5 micros. It's very, very simple. So instead of having a $420 risk, you're putting on a $220 risk for a potential $220 trade or $400 trade. This one also confirms if you look at the reason why candle here and you use any stop loss above the reason why of 40 points, you definitely would get out of this trade. But if we're going to cut this in half, we want to put this stop loss at around 20 points here. So again, let me kind of drag this box across here if it wants to cooperate with me. And let's move this across here. So if you look at from the low of around 950 all the way up to around 970, that's going to be our 20-point risk here. Next candle confirms, just pays you your 20 points, doesn't really scare you out here on that entry candle. Again, this is 2 for 2 here. Now what I recommend is, depending on how many accounts that you're trading, if you have a little bit of accounts, meaning you're trading 1 or 2 accounts, you guys should be done for the day. Quick $200 winner here, or a $100 winner depending on your size. Quick $100 to $200 or $300 winner here depending on your size. Again, that all in all, that's anywhere between a $300 and a $500 day. If you're only trading 2 or 3 accounts, I would just wrap it up. I have a firm rule that If any one of my accounts hits 2 winners in a row, I completely walk away. In this particular case, if I was to take one trade on one account and another trade on another account, I would still consider that 2 for 2 across the board. Now, let's say you have 10 accounts or you have 20 accounts. Those accounts that took these trades are going to get put to the side. They're not going to be traded. And what we're going to be looking for next is going to be to continue to trade other accounts that have not been touched yet. Now, this is where things get a little scary, right? This reason why on this 20 play is 85 points. So here's what I start to tell myself if we start to really get over 35, 45 points on a reason why. I go from not trying to grab so much of a one-to-one, even by cutting that candle in half. Like, I don't really want to risk 45, 50 points to potentially see if it can drive up 45, 50 points. I will turn more into a hyper scalper in this type of situation. So in this type of situation, I might only give myself, on a candle that's this large, I might only give myself 10 to 15 points and say, hey, if I can pick up 4, 5, 6 points, I'm going to get out. In that particular situation, because of this particular instance, the candle is 85 points, I'll just go a mechanical stop loss of around anywhere between 10 and 15 points, and I will look for 4, 5, 6 points to the upside. So entry price on this would have been over 967. It shoots up to 975. You would have got your 4, 5, 6 points there. This short play never confirms. This one here is a 51 point range. We're going to give ourselves at least 20 to 25 points worth of risk. And on this particular play here, the high price is 987 and we drive all the way up to 998. And then we ultimately drive up to 20,000, or excuse me, 22,011. So from an entry price of 87, you're looking at around 20 points there. So make sure, you're kind of gauging. Again, at this point in time, you've seen enough price action to see that, hey, market's really not pushing higher. We're really not pushing lower. We're kind of just going back and forth in this range, slightly going higher. So you definitely, as you get more deeper into the trades, 4, 5, 6, 7 trades taken on the day, you have to adjust, right? We're not just going to start the day looking for those big one-to-ones, 20, points plus, and continue that through the day. If we see that the price action is not really cooperating, we need to really go down and we need to protect ourselves in terms of where we're taking our take profits. I hope this video gives you guys a little bit more clarification. Make sure to like, comment, and subscribe if you guys want to trade with me. Join the Discord community. It's got access to a lot of lessons that are not on YouTube. We do daily live trading in there as well. That link is down in the description box. If you guys need Apex accounts so you can go out there and try this system, try this strategy, use code DAnthony at the time of using that code. It's going to give you the best available discount that Apex is offering. So if it's 50%, it'll be 50. If it's 90, it'll be 90. If it's 80, it'll be 80. Just make sure to use that code. It really helps support the channel. I appreciate it. Keeps me making these videos. I will see all of you guys on the next one.